Your order block keep failing you and you keep getting stop out, but have you ever asked yourself why? It is not because your order block don't work, it is because you are trading order blocks that are not backed up by institutional move or big banks. In this video, I will teach you how to identify a high probability order block. Here are the 4 basics of order block. I will teach you what is a high probability order block, the psychology behind a high probability order block, the qualities of a high probability order block, and finally how to trade order block. So watch this video to the end if you want to change your trading lifestyle. So what is an order block, referred to as short OB? So an order block, it is a price action concept used mostly in smart money concepts, SMC. It is a specific candle right before a strong impulse move in price. Now this candle tells us where the large institutional orders were placed before price pushed sharply in one direction. Take a good look at this candlestick, this last candlestick. Now after this candlestick, what can you see? You can see a large impulse move. As you can see this large impulse candlestick that came down after this order block. This candlestick before the large move is called the order block. Now take a look at this bearish order block right here. Before this move happened, you can see a candlestick before this bearish push down move. Now the candlestick before this push is what we call the order block right here. So this is the order block. This is the order block. I've marked it green. As you can see, there we go. Now this order block happens before the whole push to the downside. Price will likely come back to that order block before pushing to the downside. Now for a bullish order block, it is the last candle before the huge move to the upside. Identify the last order block right here at the last bottom before price skyrocket to the upside. So what are we expecting? For a bullish order block, we are expecting price to push down, medicate it before pushing to the upside once again. Now the psychology behind order block in a bullish scenario is this: when the institutional traders or big banks need a large order to buy, and they will also need a large sellers to sell to them the same quantity of orders. Now at some point, the sell quantity will not be enough for the buyers to push price to the upside, so they will push price to the downside. In a bearish scenario, let's say we have price giving us a higher highs, higher low, higher highs, higher low, and higher highs once again. So the buyers will purposely, or institutional traders will purposely push price to the downside, deceiving sellers, you see, trapping sellers once again to buy, and also stopping out the new buyers that are put their stop on this level right here, because price is giving us a higher highs, higher low, higher highs, higher low. As a beginner or as a trader, normally as a normal trader, what should we be doing? This is where we put our buy position and put our stop loss around this area. But unfortunately, institutional traders will come and stop us at giving us a change of character for sellers, for new trend. Now sellers will not think that yes, price is about to push to the downside once again. They will now wait for price to retrace, push, keep on selling to this downside. Now what did they do? They have invited more sellers to sell to them, and also they have manipulated the buyers, we buyers that have bought here before but already gotten stop at, to assume that yes, the price is coming to the downside. The old buyers will now keep selling, which you will see price keep giving us this lower high and lower low. But unfortunately, once the orders have been fulfilled, or the quantity of sell the buyers need or institutional traders need, they will push price immediately to the upside without warning. So this is the psychology of order block. Now there's going to be a candle, just like I've explained on the candlestick, there's going to be a candle before the huge move to the upside, where price will likely come back to the area right here, medicate it, collecting the remaining order before pushing to the upside. Now, to identify a valid or a quality high probability order block, it must have these four qualities. If you look at the charts, there is a lot of candlestick representing order blocks, but the quality of a high probability order block is that one, it must break structure, it must be a single candlestick, it must take liquidity but not necessary. It must have at least two the same candlesticks standing beside each other. Now we have know the meaning of order block, we have understand the psychology of order block, and we have known the criteria to we use to find a better high quality order block. And the next step we are going to do is how to trade order block. So right now on the chart you can clearly see a nice order block. This is our order block. Now what are the criteria I look to validate this order block? The first option that is it collected liquidity from this top right here, it took liquidity from this top, and it is a single candle, before this huge move, and it breaks structure. And another confluence I'm also seeing is that it has the same identical candle coming to the downside. So price now have found its way to the upside, medicating the order block. So we are going to look for our trading opportunities. Now the first thing you need to do is to identify your order block on the higher time frame, either the 2-hour time frame or the 4-hour time frame. As for me, I'm using the 2-hour time frame. Now I can go to the 15 minutes directly, but it is not advisable to trade on the 15 minutes directly without looking at the higher time frame, because the higher time frame has a higher chance of reacting from a particular level, which is, as you can see, I have the higher time frame order block as my POI. Yeah, so we go to the 15 minutes time frame to look for our entry. So let's go. Now what can we see? After price tap into our order block, we got a push down to this price, giving us a change of character after price tap into our order block. And what do we see? We see another huge order block standing on its own before the huge move once again. So this is our order block, which price have already come back into the zone and is ready to push up. So if I were to take this trade, I'll set my order at this order block right here, put my stop loss above the order block little more, then I'll put my take profit at this next low right here, giving me a 1:4 ratio. Now let's see if price actually plays out. Let's see if price plays out. Okay, and let's see if price plays out, and boom, there we go. So price completely take us out of our take profit. Now note, if as is I'm not a swing trader, so I don't use the 2-hour order block. As a swing trader, if you can spot, or if you are okay to use this higher time frame order block, you can put your limit right here, you can put your limit around that area right there, and your stop loss above the area, and you can target this our low right here. It's so simple, but as a day trader, we use the 15 minutes, the 30 minutes, and the 5 minutes to look for our entry, so that price we cannot hold the trade for that long. So price has given us a change of character, which means around all this area right here, we can say we have a valid order block. What do we want to do? When you come to the chart, when you locate where you want to look for an order block, this is what you do. Now you look at this change of character and you observe where is our last lower low. We have this lower high and we have this break of structure to the downside, and you can identify that this is our low before the break of structure. So definitely we have a single candle standing as our order block right here. So we have a single candle as our order block. This is where you want to mark, and you want to wait for price to come back into the order block before you look for your trade. You go to your lower time frame to look for your trade. Now, you all, some of you who have watched my video know my entry model, and I will be using it in this particular video, so keep watching. So we have our order block right here. So our order block has been marked. Now, if you notice why I picked this order block, the first confluence I had was this order block led to price giving us a change of character to the upside. As you can see, led price giving us a change of character. The number two confluence is that it is at the extreme zone. It is the last single candle that before price keep pushing to the upside, pushing to the upside, giving us a change of character. And the third confluence is that I'm having something like in fact inducement below it. As you can see, I'm having inducement below it. This is like a trap, a liquidity where price will come and take before pushing to the upside. So we have price, we have our order block at the extreme zone. It's led to price giving us a change of character, and inducement is sitting above it. So if you are using the higher time frame to identify your point of interest, this is the best point of interest to use. So let's wait till price come into the order block, and we go to the lower time frame and look for our entry. Let us see what price is doing. Let us see what price is doing until it gets to the order block. As you can see, it has already created another, another valid order block. But if you look, this is not a valid order block. Why? Because it did not give a proper break of structure to the upside. Just like it's just a week, as you can see. So this is not a valid order block. That's why price immediately push through this order block. So it is not a valid order block. A lot of traders also use this order block. This is why their order block fade, as you can see. So their order block fade. Why? Because it did not lead to a proper break of structure and a big SL to them. So let's wait for price to come back to this our high probability order block. If we see if it's going to hold, let's see. As you can see, the order block pushed, but I don't think it's going to last for long. Okay, so what can we see? We see price have come into our order block. We should be going to the 15 minutes time frame and look for our entry model. Okay, so on the 15 minutes time frame, what is the next step? You all know the next step already, but just for the sake of video and for newbies that are here, let me give an explanation, or let me teach you my best entry model just for free. I do everything in this video, all what I've learned from mentors, to paid calls, from everything. That's what I'm giving you for free. So there's nothing to hide. We want to wait for the 15 minutes time frame to confirm that the 2-hour order block is valid. Yes, already we know that the order block is valid, but let's see something on the 2-hour time frame. As a swing trader, or if you prefer, like, you already know that this order block is a valid order block, if you are okay with it, you can immediately take a entry around here and place your stop loss below this order block low. Give it a little space. You cannot tight it, just a little space for it to breathe, because sometimes price might be tricky and come and stop you at. So where is it going to be your target? Your target is going to be this high right here. This is where your target is going to be, your take profit, and you push to the upside and price is going to take you there. So, but as a day trader, or someone who love, just like me, who like small SL, tight SL, I won't be taking trade directly on the 2-hour time frame. I will quickly go to my 15 minutes time frame and I will look for a confirmation, another confirmation once again. So on the 15 minutes, you wait for price to give you a change of character to confirm your order block. So let's see if price actually give us That's confirmation. Let's see. Okay, what can you see? Price are breaking structure. That's giving us a market structure shift once again, and we are looking at, if you observe, what is my entry model. My entry model once again is advanced SMC, where price will give me a break of structure and inducement, come down once again to push to the upside. Now let's watch if price give me the same thing. What do we see? You can see price have given me my change of character, so I'm waiting for price to give me an inducement before I enter for the trade. Okay, what do you see? After price give me a break or structure, you can see the inducements. You can clearly see the inducement. Price can give me this lower heights and lower low. So I have my inducement right here. As you can see, I have my inducement around that area. So my entry is going to be the nearest key level. The nearest key level, as you all know how I trade. So where's my nearest key level? I have my nearest key level around this area right here. This is the OC key level. If you have not watched, if you don't know what I'm talking about, watch my previous video where I do a full breakdown course on my alchemy strategy. So my entry is going to be here because why? Number one, we have our order block confirm, giving us a change of character or a market shift, structure shift. We have our inducement and we have our key level. So my entry, my stop loss is going to be around this area. Why is my stop loss going to be around this area? Because you can see the whole full body candle at my entry. Yeah, you can see this body candle, this full body candle right here. So price might tap me, come down, price might keep pushing down before going up. So this is me trying to protect my stop for better invalidation. So my stop loss is going to be around here a little bit, and my target is going to be at that high right just here. All right, so let's see if price come and tap me. Now what do you notice? If I compare this 2 hour 2 hour order block with the 15 minutes order block, you can see the difference. Let me zoom out and see what price gives us. Okay, on the 2 hour order block, you can see price gives us a 3 risk to reward ratio, 3.8 risk to reward ratio trade if price hits our target. And you can see our 15 minutes order block giving us a 5.7 arrow trade if it hits our target. So let's see if price hits our target. Let's see. Okay, price is rejecting a proper, wow, price is rejecting. Let's see if price come back down and take us in the trade. Okay, we are in already. We are in for the trade. As you can see, it's sniper entry. All right, a good start. Okay, all right. Okay, so first of all, what do you see? You see why I say my stop loss is going to be below this place. If I had put my stop loss around this area, I would have price would have stopped me out already. But just me being careful, I placed my stop loss around that area and price almost take me out. But as you can see, the momentum start kicks in, which means price took extra liquidity from this area before pushing to the upside. So let's see if price will give us our 1:5 targets reward. Okay, let's see, and boom, there you go. So for a set scenario, if you look at this trend, what is price doing or what price have done? You can see this higher low high around this area. Price came down, giving us another higher high and came once again and giving us a break or structure or a change of character from this level right here. Has given us a change of character from that level. And where is our order block? This order block is the order block that led to price giving us a change of character right here. One, it's led to price giving us a change of character and it is at the extreme level. So let's wait if price come back to that area and let's see, go to the 15 minutes and we look for our entry. Okay, so price have come into the other block. We move straightly to the 15 minutes time frame. So on the 15 minutes, let's wait for price to give us a proper change of character and we locate our other block. So as you can see, what do you see? Price have come back to give us a change of character once again. Now if you are confused about this change of character, I'm switching now to the line chart so your eyes can open to it. What do you see on the line chart? What do you see? I talk on this on my previous video where I teach on my alchemy strategy, everything there, or I break down everything, every single thing there. So as you can see, price gave us a confirmed break of structure to the downside, and if you also look, it is confirming by the candlestick, by this area right here. This is where price break, and what do you see? Price came down, it push up with, after this candle, it push up with a strong momentum and push down the strong momentum once again, giving us an inducement. This is our inducement. Now where is our nearest key level? Let me mark this as inducement. Our nearest key level is at the extreme zone right here. So the whole concept is we locate a high probability order block, and we look for our trading model, my best trading model, and we take the trade without fear, reservation, or hesitation. So where is going to be our target? Wow, straight to the downside, because all this move right here, all this move, it is a retracement. Price tap into our order block and it's going to push down. Now if I'm to take this trade in a real life, I'm going to have, because we have 1:11 trade, I'm going to have something like this. This is where I'm going to put my take profit, just to be sure, because we have a fair value gap right here. This is going to be my take profit 1, this level is going to be my take profit 2, and here is going to be my take profit 3 around this area, and around this area, and my final take profit is going to be around this low. So let's see if price give us all of the take profit. Now we have identified our inducements already. Let's see price when they tag us in the trade and do what he wants to do, because all set up our line now. Okay, so as you can see, price is pushing to the downside. Okay, boom, take profit 1 is gone, take profit 2 is gone around this area right here. No pressure. Let's see the price come down. Wow, take profit 3 is done, and let's see if take profit, wow, all take profit done. 1:11 raised to 1:3. So simple. Like, just identify a high probability order block. A high probability order block is a order block that leads to a change of character. 2, an inducement must be sitting under or above the order block, or a order block must take liquidity, and the best simple part is order block must be at the extreme zone. If it's not been must, but if you know, as a kind of trader who wants to make money, you have to wait to see a high probability order block. So if this video is helpful, please do well to like, subscribe, and comment on whatever video you want me to do again. And don't forget, watch my alchemist video, which is the previous video, the alchemy strategy. I talk on all the concept of how I trade this strategy. So please do well. Thank you very much.